The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum. Investing in Jamaica.
Good afternoon, ladies and gentlemen. Welcome. I'm your host, Dan Theok, Senior Vice President of Investment Banking, and I'd like to thank you all for joining us today for our special investor briefing where we'll be looking at the Q2 results from Mayberry Investments Limited. I'd like to apologize for the absence of our Executive Chairman, Christopher Berry, but I'd also like to welcome at the same time our CEO, Gary Pratt. Welcome, Gary. Thanks for joining us.
Thank you very much for having me.
Excellent. If you're a fan of the content, please don't forget to subscribe and also hit the bell to stay up to date with the channel. We upload content just like this just about every week. I remind you that there will be a Q&A segment at the end of the program, so stay tuned and don't feel free to send in your questions in the chat. We'll be looking at them later on in the program. If you want to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media to learn more about how you can get started today. Okay. Up first, we'll bring up our presentation on the Mayberry Q2 results. I'd like to share that with you, hot off the press. And on the first slide, we can see here us showing, and I'll need my glasses to read that, that the total shareholders' equity is at $26.9 billion. That's a 7.4% fall year over year. The year-to-date profit is $790 million. That's a decrease of 69% compared to $2.5 billion for the half year last year. And we'll talk a little bit about that as we get into the program. Year-to-date net operating revenue is $267 million. That's down 95%. Total assets, however, have increased by 5.8% over the same time last year at $56.7 billion. The net book value per share now at $14.17, down 7.5% from last year when it was at $15.32. On the next slide, we show the financial highlights for the half year. And I do want to comment on the fact that last year was sort of coming out of COVID. We had a really big pop through our subsidiary MJE, over $5 billion of trading gains made on the stock market as share prices sort of returned from two-year lows. And so that was shown in the last year, half year's number. But going through the numbers for the 6 months to date, I just want to make the point that net interest income and other revenues were $267 million for the half year, which is 95% lower than $7.3 billion last year. As I said before, last year had an approximate $6 billion gain in the uplift in the price of the market, the fair market value adjustments that we do through P&L. Operating expenses, you can see, were contained by 16% and actually fell from $1 billion last year to from $1.25 billion last year to $1 billion currently for the half year. And the net result of that is a $6.3 billion profit that we had last year, falling this year to a $790 million operating loss. And then we factor in our share of profits from our joint ventures. And this year we have a $947 million gain compared to a small loss last year. Our net result is our net profit attributable to shareholders for this half year is $293 million, which compares to $3.2 billion, which compares to $3.2 billion for the half year last year. Going further down through the retained earnings, we have other comprehensive income of $513.7 million for this half year, which is up 127% from $225.5 million for same period last year. That results in total comprehensive income of $667.7 million for this half year, and an earnings per share of 24 cents for this half year, again compared to $2.67 previously. So long and short is business is still generating good cash flows, over $600 million of income, but that has fallen substantially from last year, where we had a $6 billion unrealized gain in terms of fair value through P&L adjustments in relation to MJE's significant growth in its stock portfolio. Moving on to the next slide. This shows essentially the profitability in a chart format, and you can see what's happening for the 6-month 2023. Net profit 154, net profit attributable to shareholders 293 million, total comprehensive income $668 million. Next slide. And this shows our operating expense analysis, and I did mention that we contained our operating expenses by 16%. They fell by $200 million for this half year compared to the last half year. One of the big savings is last year we had expected credit losses, ECLs, that ran 13%. This year that's down to under 4%. So good to see us getting back on top of the loan management. And other than that, staff costs running about the same thing, and other operating expenses running about the same levels. Next slide shows the summary of the balance sheet, just in terms of total assets, and we mentioned that before. Total assets up by 5.8% to $56.7 billion, and the total equity, as we mentioned, down by 7.4% to $26.8 billion, and that results in a net book value per share of $14.17. And again, $26.8 billion of equity certainly represents a adequate level of equity for Mayberry Investments Limited, which is a regulated entity and is meeting all of its regulatory requirements. Next slide. Again, showing the total assets and liabilities movement in graphical form, which I just explained. Next slide shows the share price compared to the NAV, the NAV being the book value, being the shareholders' equity translated into price per share. So we divide the total equity by the number of shares and come up with sort of the breakup value of the business, if you will. And it's very unusual to see a bank trading at below its book value. In fact, we more typically expect to see the bank trading at a premium to its book value. And what we see here, as registered by the green line that shows the book value versus the blue line that shows the share value, we can see that the share price at end of the Q2 2023 was $9.08 compared to a NAV of $14. And so the graph doesn't really do justice in that. That's suggesting that we're trading at a near 40% discount to book value, which is significant and quite unusual. And that certainly signals a great buy opportunity for the wise investors out there. When you see a company that's profitable and their stock's trading at a discount to NAV, that's usually certainly an indicator that it's time to be buying that stock. Next slide. This shows what's been happening with the stock price over the last 2 years, and you can see it's peaked at a high of $12.50. And as I mentioned, currently trading at $9, so down 30% in the last year. Not unusual for the GSE right now. We see lots of stocks trading down 20 to 30% over the last year. So we had a big rebound coming out of COVID in first and second quarter last year. Seeing interest rates, or the sustained increase in interest rates, finally causing PEs generally in the market to fall. And so we've seen a substantial fall in PEs in general terms, and a lot of stock prices pulling back 20, 30, 50% in the case of NCB, my favorite buy at the moment. And so what we expect, all things being well, if the company continues with its profitability, as we see interest rates trending down over the next 6 to 9 months, I'm going to guarantee that we're going to see stock prices in the market generally increasing by 20 to 30%, and for the blue chips by even more. Next slide. This shows the dividend history of MIL since IPOing in 2005. So while not paying any dividends for the first 2 years, it's clear in the last 5 years, you can see a very good trend in terms of dividends cents per share, paying as high as 57 cents per share in 2018, but averaging somewhere about 25 to 30 cents in general terms, and with $4 billion in dividends paid in the last 15 years. So we do want to make the point that it's a good dividend paying company, consistent. And so for those of you, the more mature investors who want to see some kind of income flow and don't focus only on capital appreciation, MIL is clearly the stock for you. And again, you can see it graphically to the right, the dividend flow, and again, a very steady, consistent dividend throughout the last 5-7 years for sure. Next slide. Again, shows the sort of cumulative net book value, the net book value plus the cumulative dividends. So this is a good way to say if you've bought this stock at X price and held it for the last 5, 10, 15 years, the dividend flow that you've gotten is a good way of saying what your cumulative return has been back on the stock price. And so this graph shows that for you for the last 10 years. And you can see sort of consistently that your return is growing with Mayberry. Next slide. And that's it. So in a nutshell, that is that's the presentation on the results for the half year. With the biggest point to note is, $6 billion in huge one-off gains last year from the jump in the stock market didn't repeat itself this year, and instead what we see for the half year is the business throwing off a certain level of normal operating profitability. And so happy to start receiving some questions online. I have 2 or 3 for Gary and myself, but before I ask my questions, Gary, if you have any comments that you'd like to make in general, let me know.
Sure.
Before we get into the Q&A.
Well, thank you, Dan. And the first comment I'd like to make is that, it was a very good quarter for Mayberry. As you all know, the first quarter we recorded a $600 million loss. And for the quarter just ended, we recorded $780 million. So what that meant is that we wiped out the first quarter loss and actually now have a profit for the first 6 months, which is a tremendous result for us. And as you pointed out, Dan, this is after the market has come off somewhat. So what it shows is a diversification of Mayberry's portfolio, that we can make money even if the stock market is trending down. And I just want to take the opportunity to thank my team, board of directors, and my customers and clients that made all of this possible.
Good deal. Thank you for that, Gary. And so first question that's coming isn't related to the half year, but it is related to our scheme of arrangement. And someone is asking, Mr. Peart, could you expand on the scheme of arrangement that we've seen that Mayberry is doing?
Well, I don't know if I can speak about this as much as I should, because unfortunately, you have people out there who just don't really understand what it's about. And some people are making it about something that it's really not. So Mayberry has a group of companies, and what the scheme of arrangement does, you actually apply to the court, in essence, to get permission to rearrange your current group. So the company that you now know as Mayberry Investments is actually the holding company that owns, for example, MJE. It has 50% of MJE. And it has 100% of a subsidiary called Whitebase, which is where some of our private equity transactions, private equity holdings are. And what we're doing, we're seeking the court's approval to restructure our holding company, or structure where we're going to create a new holding company at the top. And what you now know as Mayberry will become 100% subsidiary of that new holding company. So before, you had Mayberry as a holding company with 2 subsidiaries. That Mayberry falls to the bottom of that. Mayberry reports into a holding company. And then that holding company will also have these other 2 subsidiaries, Whitebase and MJE. So really, it's just from a legal perspective, which is why we had to go to court to turn it around. The most important point about the scheme of arrangement is that existing shareholders will not lose any value. So after we have rearranged the group, your shares that you own, if it was valued $10, will value $10 a day after. So that's the most important point. It makes it more efficient. It makes it more sexy to the regulators. So it provides a lot more efficiency from a different perspective for a lot of other stakeholders that we have right now. So on the 26th, we actually have a meeting to get the approval of the shareholders, and we invite all shareholders of Mayberry to come out in attendance, because once we get the approval, we then go back to the judge, and once the judge sees that the majority of the shareholders are in agreement with this reorganization, then they will hopefully grant the order that allows us to finalize that reorg. And after that, we are back to business as usual.
Excellent, very good. And one of the main objectives, I believe, Gary, is to ensure that two entities that are not regulated sort of don't get caught up in the regulation by accident. So the idea that our private equity company, wide base, really does not need to be regulated by the Bank of Jamaica or the FSC for the most part, but sort of because it's a subsidiary of Mayberry, it kind of ends up in the mix.
Correct.
You come up with a cleaner structure where the regulator only has to regulate the entities that are doing regulated activities,
right.
yes, cambio business, the trading of securities, etc. So that's the objective of the scheme of arrangement. I hope we've made that clear to everyone. Next question, Gary.
So I just can't help myself, you know, because there's this young gentleman out there, you know, this expert that says, you know, the court is trying to tell us how to run our business. No, it's a process. So please read some more about it. It's much ado about nothing when they keep saying that people are trying to tell Chris Berry how to run his business. No, Chris Berry knows exactly how to run his business, and it's a court-appointed process that many companies have gone through this process. As a matter of fact, I think the majority of financial services companies have gone through that process. So, Mr. P, increase your educational level.
So it's a process Mayberry has voluntarily gone through to achieve this restructuring and to avoid, like I said, entities that are unregulated end up being regulated. And many companies have done this restructuring. In recent times, I can think of Jamaica National and VM as examples of businesses that have restructured, again, to ensure that their regulated activities are taking place in businesses that are regulated. I hate to keep using the words so often, but you know, in simple terms, again, as I said before, our private equity business is not carrying on regulated activities, but by virtue of being a subsidiary, it's sort of caught up in the mix of that. Next question for me, Gary, really just in general, you know, we see the stock price of MIL sort of, you know, for some time now trading below the NAV, and this is very unusual. And most financial services companies actually trade at a premium, $1.20 to as high as $2.30 in some cases. Could you just talk a little bit about that again as to why that creates this great opportunity for folks to be able to buy the stock? Just talk a little bit more about that for me.
Well,
please.
I don't really like to speak about it because I still haven't bought enough of it, right? So, I mean, Mayberry is one of the greatest buys in the market right now. And I remember the last time we had this type of conversation, Dan, you know, we were profiling the fact that both Mayberry and JMMB at the time were trading below book.
Yep.
And, you know, once we put that out there, it's interesting that since we said that, JMMB has just blown away in terms of price. It's just floated up. And it's something I've said to people. It's not a matter of if, it's a matter of when people realize that the value of Mayberry is there. But that gives people like myself more time to buy until that happens, people like yourself.
Yes, absolutely.
So it's coming, you know. And so the values are there. And, you know, I was saying to somebody the other day, you know, the situation, for example, with NCB as a stock, you know, we saw it come down into a buy signal. And, you know, the point we said to someone, the moment they declare a dividend, you will not be able to get the stock at that price.
Yep.
Right? And this is before these recent things that have come up, because we are watching the fundamentals of the company. We don't watch the soap opera, right?
Yep.
And the simple reality is that all of a sudden, we've just seen where NCB over the last couple of days jumps from $66 to $72 on very thin volume, right? Which suggests that there's more upside to come. So that's what happens in the market. You will see a stock like a Mayberry It's there, it's there. You expect it to always be there, and then tomorrow morning, when everybody realizes, wow, it is valued more, you can't get it at these prices. So make up your mind. The value is there. We've just demonstrated again the diversification of the business. The market is flat, but we're still able to make a profit. You choose.
Excellent. And then, Gary, tell me a little bit about your sort of the philosophy around dividends, because again, we've seen really strong dividends, $4 billion of dividends in the last 15 years, and so I just want to appreciate, what's the mentality, the philosophy, the thinking around this, and why is Mayberry so strong on the dividends?
So, from our perspective, we believe in value and you invest for the long term. So, the irony of investment is that when you take profit, you get cash. And when you get cash, you have to invest again. And when you invest again, you take profit. And it becomes this virtuous cycle. So, at Mayberry, because of the type of investments we do, there's no guarantee that we'll have an investment maturing every 3 months, right? It takes longer than that. And so what we do is we try to have a dividend policy where every year it increases. So we don't come out and say that the dividend is going to be 10% of profit or 30, because sometimes a lot of our profits are unrealized.
Yeah.
When we're building a building, the value comes in probably long before we sell the building. And, so we can't disburse cash until we get cash. So, but what you'd have seen is that over the period of time since Mayberry has been listed from 2005, you've seen an increasing trend on the dividend payout. And that's what we try to do. We try to make the dividend larger than the year before. And that's what encourages us to continue to invest on a faster and larger basis, because we want to keep that trend going where we keep paying a larger and larger dividend each year. Knock on wood, so far we're seeing where the majority of our investments, we keep harvesting them at the right time, and we just keep getting the cash associated with that. And, we had a great year last year. We started off rocky this year, but, we've righted the ship within 3 months. And, who's to know? This thing with NCB might be the reason the stock market explodes from this point upwards. But let's see.
Excellent. Thanks for that. And Gary, so I'm curious, I'd like to give an update to the market. So you guys borrowed $6.4 billion from the market, roughly speaking, in February 2023. What's the update on it? Have you guys deployed that capital, and what are your general expectations going forward?
Yeah. Well, we've deployed the capital. I mean, when you look on the results for the 6 months, you would have seen that our net interest income is starting to grow. It was very weak in the first quarter because we weren't able to deploy a lot of the cash by the end of the first quarter. But certainly now we're humming, we're up and running. I mean, we have opportunities. We expect, as I said, you've seen that line increase, but we expect that some of the other opportunities that we took advantage of will start to bear fruit, maybe as early as the third quarter going into the fourth quarter. So we're very excited about where we are as a business. We're very excited about where the economy is. And we look forward to a much more robust third and fourth quarter for the country. And ultimately, if that happens, I think Mayberry will do very well for the rest of the year.
Great. And then another question, it's hard to read the MIL financials without having a feel for what's going on at MJE. And then MJE is sort of the largest closed equity fund in the island. And so that leads me to, my expectation is that interest rates are going to start to trend down in the next 6 to 9 months. I think Jamaica led the U.S. in raising interest rates, and I'm personally going to believe that they're going to lead the U.S. in lowering interest rates. We see inflation numbers at the top of the Bank of Jamaica's expected range of 4 to 6%. I think we've seen 3 months now, maybe 4 months of interest, just a tad bit over 6%. I think, next 3 months we see how inflation plays out, and then the BOJ, in my view, after that next 3-month period is going to be looking to reduce interest rates. But my real question is, what's your expectation for MJE's performance over the next 6 months, next half of the year, and the stock market in general? So MJE up to, record investment levels. I want to say $27, $28 billion. I mean, how much further can it go? I know we have a broadcast on SVL later today, and a substantial amount of MJE is tied to SVL. and then to CPJ. But in general, what are your expectations for MJE for the rest of the year?
Well, again, I mean, if your prediction comes true, then MJ will do very well. Because in an environment where interest rates have started to fall, people look to the equity market, and which is why I said earlier, when we see the turnaround from NCB, that might be, for a better, the canary in the coal mine that's saying something is happening. And I wouldn't be surprised if, you hear a dividend coming out of NCB, I mean, and that stock takes off, and you couple that with a potential rate decrease, I think the stock market is going to do very well. I mean, we saw a lot of good opportunities in the second quarter, and we think we've taken advantage of them. Um, so any infusion of cash into the market in the third and fourth quarter is there's no stock available, so the prices are likely to increase. If that happens, MJ will do very well again by the end of the year, and we look forward to that because MJ is pregnant with opportunity. We have stocked up. We're now waiting for the market to respond, and I like what I'm seeing. We put out the numbers recently. So NCB is an addition there. We've seen where NCB has turned. We expect it to go higher based once everybody settles down and start to look at what makes sense. SVL, their numbers are coming out this evening. If it hasn't been posted already, and big things are expected there. An investment we had, Lasco Distributors. If you look at what has been happening with Lasco Distributors, one of our competitor brokers has come out and all of a sudden put a price on Lasco of over $7. And when they did it, I think the stock was trading a bit under $3. It's now up at 4. So there's a lot of companies out there that are pretty undervalued. That if you get that rate decrease that you speak about, Dan, I mean, there's only one direction those shares are going to go. And as I said, MJ has quite a bit of those shares, and we look forward to that. Once that happens, it's going to be a very, very good year for MJ.
Great. So there are two great buy opportunities, it seems. One is MIL and one is absolutely MJE. I saw the chairman tweeting that he was tippy-toeing back into the market, and I gleaned from that maybe some of the $6 billion funds were used to buy equities, just maybe. So I look forward with bated breath to see how the next 2 quarters
Well,
unfold.
remember the $6 billion was for Mayberry, right?
Yes.
And so Mayberry funds different customers
Yes.
who may be interested in doing other things.
Yeah, so maybe I may have funded MJE, maybe just maybe
Maybe.
with a margin to allow them to buy some equities. I think time will tell, but for sure, I'm definitely, Gary, excited about the outlook for the market. I was speaking to a friend on Monday about NCB, and he says, "Oh, I'm waiting till it falls to $60. I want to buy 50 million." And I said, "What's the point of waiting? If we agree it's undervalued, it's likely to get to $120 in the next 6 to 9 months. Why are you waiting to see if it falls? Don't try to time the market for when you think it bottoms out. Just buy it because you see that there's good value there." And that was a conversation we had on Monday. You know yourself. I won't call your name. And today the stock's at $73. So, I don't wait until you think stocks have bottomed out or you think the market has bottomed out, folk. When you see the signals, the stock's trading way below its NAV. It's a strong company, has good dividend paying capabilities. We know interest rates have peaked and they're likely to be trending down in the next 6 to 9 months. That, folks, is the time for you to start buying. Don't wait until 6 months' time when you see the BOJ first drop interest rates, and in 3 or 4 months' time, by the way, when they first drop interest rates, then everybody's going to be rushing, and then the market's going to take off in 30-day period, and you will not be able to get NCB at $73 where it is today. You will not be able to get Mayberry at $9, and you won't be able to get MJ at $11 where I see it trading today, which is ridiculous. The NAV on MJE is $15, but it's trading at 11. So huge value buy opportunities there, I believe, between NCB, MIL, MJE. You guys need to go out and buy some of those stocks. And I'm a big believer that we're going to see the index up by 30%, GSE index up by 30% in the next 9 months. That's my prediction. I'm here every quarter. I look forward to discussing this over the next 3 quarters to see how that plays out. There's just some great buy opportunities in the market right now, folks. And everybody's, a lot of folks, there's over $60, $80 billion sitting down on 90-day government paper earning 9%, waiting and watching the market. And I'm telling you, those rates are going to be down by 200, 300 basis points in the next 9 months for sure, maybe 6 months. And then everybody's going to try to switch and go back into equities, by which time it will be too late. Well, I think that's really it, Gary, unless you have any closing comments you'd like to make on MIL.
No, well, I'll just repeat the point. The second quarter will reverse the first quarter loss, and we have a year-to-date profit. It's an amazing turnaround in 3 months, and I have to thank the team, as I said, the team, the board, the customers, and we look forward to the next 6 months. We think the economy is at a very interesting stage. As Dan indicated, if the interest rates fall, the next 6 months will be very, very good for the company and ultimately the shareholders of the company. As has been pointed out, the company is trading below its NAV, and it's a huge buy opportunity. And it's not a matter of if, it's a matter of when the market wakes up one day and realizes how undervalued Mayberry is. When that happens, make sure you're a shareholder. Thank you.
Absolutely. And remember, folks, come out next week to that scheme of arrangement, as well as we'll be having our AGM next week. So feel free to come out as well, too. Well, that's it for today's discussions. I'd like to thank our viewers, as usual, for tuning in. A big thanks to Gary for making this briefing very insightful and for your thoughts. We really appreciate that. If you're curious about updates on our virtual investor forums, then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. So give us a follow up to learn more about all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the like bell to receive notifications. Join us again at 5 p.m. today for another special briefing where we'll be looking at Supreme Ventures Limited. And I think Gary and myself will be back again to discuss that one. So remember, wise investors, to keep safe and slow and steady wins the race. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.